One of my absolute favorite trade setups to take is hands down the reversal. I am obsessed with reversal trades, especially when they are near prime levels or KPLs per my strategy. And I always get asked, Britt, how do I prevent myself from getting faked out? I feel like I try to trade reversals and I am just constantly getting stopped out, or I'm just not really catching them and I'm always betting against the trend. There's just so many horror stories with trying to trade reversals. So in this video, I'm gonna bring you guys exactly through my step-by-step process on what I look for when taking A+ trade reversal setups. And today's reversal on oil was absolutely killer. We were looking for this trade plan. Okay, so here is the picture that I posted. You can see I was looking for rejection at 57.78 and my target was 56.93. Looking at the chart this morning, you can see this morning we got extremely close to that level and then started heavily selling off. So for me, as long as we're within the range of that level, usually about a few ticks below or a few ticks above, because I am trading futures, I will consider that level hit. Now, obviously it's most ideal if we have a reaction candle at my level. What that means is a candle moving into it and then me seeing a reaction to play off of. However, this was still close enough to start to develop a trade entry based off of my entry model. Now, you can see we have absolutely melted since then and have gone way beyond our target of 56.93, which you can see on this chart. I hope you guys love my elementary drawings. This is how I post my trade ideas, because for me, this was the best way that I learned, is seeing it and being able to react before it started to play out. So overall, fantastic reversal trade from this morning that I want to help break down for you guys to understand thought process, what I was looking to enter, risk management, all of those things, and how to prevent yourself from getting faked out. Okay, rule number one, and this is an absolute crucial rule for me and my strategy with trading reversals, is be near a KPL. Now, I know the first question you guys are going to run to my comments with is, Britt, what is a KPL? What does it stand for? And how do you find them? So a KPL stands for key pivot level. Now, this is something that I created part of my strategy that actually is relevant regardless of what strategy you trade. So let's say that you are a supply and demand trader. Your KPLs are your supply and demand zones. Let's say you are a support and resistance trader. Your KPLs are your support and resistance lines. Now for me, my KPLs are based on mathematical lines that I believe algos have their order sitting near. I have spent years and years perfecting my strategy. I've been trading for over 9 years now, and I have seen these levels be extremely accurate. And once we are at these levels or near these levels, usually you will see something like a supply and demand zone be created. So for me, my levels come before supply and demand zones. So now that we had extreme supply off of this level, hence I already had this level on my chart. One more time. You could see I pre-drew this level. Price was at 57.68. I drew this. You could see when I posted this, it was 8:52 a.m. And at 8:52 a.m., we were right in this area before this large move down. So I already had this level predetermined on my chart. I saw the reaction and then I posted the trade idea. The reaction being we moved up into that level, near that level, and then started to see selling pressure off. When I see a reaction like that, especially near a larger KPL, I know that my A+ trade setup for reversals is happening. So the first thing is you need to be near a KPL for a reversal to work or have a higher probability of working. So for example, let's say that you are a support and resistance trader. You could have zoomed out and looked left to see that right here we had prior support that could turn resistance. That's another thing that we did that could be a KPL for you. So you can see right here where I had a predetermined KPL of 57.78. If you didn't have that on your chart, you could look left, see we had prior support right there, and then know the rule that prior support can turn resistance. And if that happens, that's a bearish sign. I mean, look at that wick off and look at this absolute meltdown. So for me, KPLs, I love to see when they're layered on top of one another. So not only do I have the way that I draw them, I do consider the way that other traders draw them based on their strategy. So for example, there was prior support that could turn resistance. That now makes this zone and this level here way more important to me. The more layers that you can have with KPLs, the stronger those levels become. Now, not only that, we also had a downtrend. So right here, you can see that we are connecting this high point right here where we started to make lower highs. We're connecting those points and we have a downtrend. Now, this is one of the reasons that I preach when you are a trend line trader, you have to be layering in other things rather than just trading trend lines. Why is that? Well, you can see if you would have waited just for that trend line to reject, you would have missed this short right here. So for me, I know we're in a downtrend because of that trend line that I have on my chart, but I'm not going to base my short entry or my reversal entry just off of trend lines alone, because a lot of times you will be missing the trade, which I guess is fine if you want to be super picky. But for me, the thing about trend lines is it's just helping you see the trend. And I do like to draw the trend lines on larger point of view to help me understand that, but I do not base my trade entries off of trend lines alone because, again, oftentimes they are subjective, meaning you can have somebody have a trend line way over here, somebody have a trend line way over here. They're just meant to be guidelines, in my opinion, not to be precise entries or exits for trades. This was just telling me that we are in a downtrend. Right? That's not anything that's mind-blowing. We're in a downtrend. There's multiple ways for you to identify that we're in a downtrend, and a trend line is just one of those. However, it does help my thesis that we need to be near a KPL. So that throws in another KPL into the mix. I consider trend lines another KPL. So we have prior support, could turn potential resistance. We also had my KPL, which was, let me go back in, which was right here near that 57.78 level. So that was a huge part of why I was personally looking short. And then I layered on all the other market analysis, which gave me the downtrend, which gave me that key level, which used to be support, that could turn resistance. But for me, the gray lines are my golden KPLs that I base my trades off, and then I layer. So whatever strategy you use, again, if you're a supply and demand trader, the basis of your KPLs will start at your supply and demand zone, and then you can layer in other things, like let's say trend lines or potential EMAs if you use those. I just did a video prior to this talking about you can add on EMAs to help you understand trend better. I did make a small mistake and say daily when they really are based on bar. That mistake is because a lot of my analysis is coming from the daily time frame. A lot of my levels are from the daily chart, and then I work my way in. So it's a habit for me to say day. However, we can add those on to see if there is any ability to help you see the reversals using those. Again, I don't personally use these because I consider them training wheels, and I've been watching the charts for 9 years straight, so I don't need help understanding price action. But if you are having a hard time understanding trend, you can throw on the 9 EMA, which in the 5-minute chart is going to show the 9 prior bars, and VWAP. Those are great beginner indicators if you are struggling with trend. Now, what I want you to take note of here is you can look for when the candles start to close below the 9 for short entries, and you can combine that and layer that in with whatever else you use. And so you can see we started to break this uptrend here. And at the same time, we also started to have the candles close under the 9. So that was a great indication that we are looking to reverse to the downside. If you want more on how I use or used to use, because this is an old strategy of mine, the 9 EMA and the VWAP, you can watch my prior video. Again, it's great for beginners or if you are having trouble seeing the overall trend and you want to look to take reversals or even take continuation, these can be useful. Okay, so when I'm looking for reversals, rule number 1 is be near a KPL. By the way, I know some of you are gonna ask, if you want more information on how I find my golden KPLs, which was this 57.78 here, as well as more info on my strategy A to Z, just check the description box down below and I'll drop more education material down there. So rule number 1, be near a KPL. Let's go into rule number 2. Okay, rule number 2 is going to be have clear trend and volume. So one of the most important parts of being able to take a trend reversal is to what? Have a trend in the first place. So many times I see traders trying to take reversals when we are stuck in like this range that you can see in pre-market here. And there's no clear trend to even take a reversal off of. So you need an actual clear trend to take a reversal off of a trend. I know that sounds like super kindergarten stuff, but oftentimes you guys aren't realizing it because it is so simple. A lot of times you guys are overcomplicating your strategy and missing the simple basics that make all of the difference. So make sure you have a clear trend when we are looking to take a trend reversal, because if you are trying to take reversals off of chop, it is going to be very difficult to make those work. You're going to get a lot more fake outs. You're going to get a lot of chop, hence a lot of paper cuts. So make sure you have a clear trend and volume. Now, the easy way to have volume is to trade something that has a lot of volume. I know that doesn't sound really mind-blowing to you, but a lot of you are trading things that don't have volume. So for me, this is why I love day trading futures. There is always volume. It doesn't even matter if it's just in pre-market, as long as you're waiting for the right times of day, which is absolutely crucial. I only take trades for reversals at certain times of the day, and that is part of my market structure and analysis for my trade plan. Again, all of the details and more can be found in the description box down below. But just a hint, let's say that you like to trade oil. A lot of the volume, just look back at data. When does the volume start to spike on oil? Traditionally, you will see volume start to spike in pre-market. I would say around 6 a.m. or after is a good time to look to start trading oil. But you can see that volume really started, and the trend really started around 4 to 5 a.m. here. That's when this trend started to form. So just whatever you're trying to trade, make sure it has volume. Again, futures are very, very liquid and have volume in pre-market, definitely during market open, as well as after hours. If you want to trade after hours at nighttime, gold is another great one. I have members in my group, and we just actually added a new analyst to the Peachy team. His name is Kith, and he's gotten, I think, over 29,000 to 30,000 worth of payouts from prop firms trading gold alone using our strategies. And he just got welcomed to the team as an analyst, and he shares his trade plans. But gold oftentimes has great price action at nighttime as well. So there's a lot of flexibility with futures that I really like, but just make sure if you were trading something, let's say like stocks or options, make sure you have volume when you are looking to trade, honestly, reversals or continuation. You absolutely need volume. All right, and moving on to rule number 3, which might be the most important rule. And rule number 3 is understand larger point of view trend. We've already briefly touched on this, but I want to really nail this down for you guys because it is so important when trying to trade reversals. Now, I will absolutely consider a trade counter larger point of view trend, but the key thing here is I know that if I am trading counter larger trend, it is more of a scalp and a quick trade on a pullback and not a complete reversal. Now, what is the difference between a pullback and a complete reversal? Well, a pullback can look like this right here. This is a swing up and a pullback, okay? Swing up and a pullback. Pullbacks are not actual reversals. They are what I just said, a pullback, which creates the ebb and flow of the overall trend. Oftentimes what I see traders doing wrong when they are trading reversals is they are trying to get some home run reversal when they are literally just going to be catching pullbacks because the actual overall trend has not broken and or you are counter larger point of view trend. So you can absolutely scalp pullbacks, but you need to know what you're trading. One thing that actually can help you understand that is by looking at VWAP in the 9 EMA on my chart. So if we are above here, so when I say above, price is above and the actual 9 is above VWAP, that's bullish. When we cross below, that's bearish. So these are all pullbacks because we're above VWAP and we're above the 9. So the 9's above VWAP. Price, when it is above the 9, is very strong. And you can see when we crossed below, it was still only a pullback because we're still above VWAP. That's an easy way to think about it without understanding larger point of view. But if you pair that with understanding larger point of view, you will have a much higher win rate on reversals. I know we've already went over this, but just one more time. Remember this downtrend I showed you guys earlier? That means from a larger point of view chart, we are in a downtrend as long as these lower highs here are holding. That means you should always put an emphasis on trading with the larger point of view trend, especially when looking to take reversals. So, knowing that we are in a larger point of view downtrend, when you go to the smaller time frame to day trade, what trades should you be looking for? Or at least put a lot more emphasis on your size and look to really scale up in because you're going to be trading with a larger point of view trend, aka have more of a higher chance of succeeding on that trade. Because the larger point of view trend is short, so you're going to have a much higher probability of taking short reversals on a smaller time frame because you're matching the trend on the larger time frame. Now, that doesn't mean you can't take long trades. There was absolutely a long trade to that point of resistance this morning. But that means that you always need to be aware of that larger point of view trend. So if you are trading counter trend, you are more aware because you can see this larger point of view trend started at 4 a.m. this morning and then lasted until 8:40 to 8:45, right? So almost 5 hours for this uptrend, which was quickly erased completely in 1 hour. Why is that? Why was the downtrend so much faster than the uptrend? Because the larger trend is down. I hope that makes sense. So let me get these all organized for you guys in a clear little picture. Again, trading does not have to be super complicated, guys, especially when you are trading something like reversals. One thing you want to pay attention to is, are we near a KPL? Remember, that is going to be based on your strategy. It's a key pivot level. For me and my strategy, I have algorithmic based levels that I have spent a lot of time perfecting, and that is where the basis of my strategy starts and where I get my highest probability trades is near those KPLs, especially when we see reactions like this. I then layer on other things like trend lines, like SMAs. I have a prior video on that. EMAs is something you can add on. I don't personally use those anymore, but I do think they're great training wheels if you're having a hard time understanding trend and overall market direction. The next thing you need is clear trend and volume. You need to be trading something that has volume and a clear trend, or you're constantly going to get chopped out of your reversals, and that's going to lead to too many paper cuts and you thinking they don't work, when in reality, you're just not trading maybe the right thing. Maybe you're trying to trade low volume stocks or options that the premium is constantly chopping you out with theta and time decay. Futures, you don't have any of that. And rule number 3 is larger point of view trend. If you are going to trade counter larger point of view trend, at least know that, so you're quicker to exit and just looking for scalps and pullbacks. If you are trading with that larger point of view trend, you're going to have a much easier time on your reversals, because you can see once the micro trend breaks, we saw this really nice flush, and overall this was an absolute A+ trade for us. If you guys are interested in learning more from me, I did say check the description box down below, but just so you know, we have the Peachy Trading School where we share our daily trade plans. I have multiple analysts in the team. Like I said, we just added Kith, who does phenomenal analysis on gold. We also have Goose, who does a lot of analysis on oil, and I like to trade a variety of things. So I pop in after doing my morning analysis, and whatever I see the most clear, I also share my trade plans, as well as all of our A to Z courses are included. So if you're a complete beginner or an advanced trader, you can come in and find value. So I hope you guys found value in this video. If you did, make sure to hit the thumbs up button, notification bell, because we are trying to post videos as often as possible. Also, make sure you're giving us a follow on Instagram. We have a ton of imposter and scammer accounts. We will never direct message you. We will never send you a friend request. So please make sure to block and report. And that's all I have for you guys today. I hope this was helpful. And one more thing, we do have a free investor newsletter. So if you guys want to stay up to date and get free weekly emails on Sundays with everything going on in the stock market, economy, data, all the big things with earnings coming up, make sure to sign up for that. And I will see you guys next time.